All right, Steve here. Look, we just saw a monster recovery, one that absolutely crushed the bears in less than 2 weeks. But hey, if you're out there popping champagne right now, you are missing the giant cracks forming right under the surface. This isn't a simple V recovery anymore. No, we are heading straight into a high volatility, sideways chop.
Okay, let's really unpack this because this quote, it nails it. The market is coiled up like a spring. I mean, every algo, every single trader out there is just holding their breath, waiting for the next signal. And let me tell you, the next 48 hours, that's the whole ballgame. It's going to decide if we punch through to new highs or if this whole thing collapses and we go right back to the floor. You can literally feel that tension building in the tape.
So let's look at the tape. What's jumping out at me here is the massive divergence. On one side, you've got the S&P 500 sitting at a record close. Looks beautiful, right? But then you look over at the physical markets and they are screaming bloody murder. Brent crude, it's ripping higher. Gold is catching a bid. And even Bitcoin, a risk-on asset, is softening up. See, this is not a picture of strength across the board, not by a long shot.
All right, let's break down the bull story first. Because you got to admit, on the surface, it looks pretty darn compelling. I mean, the rally we just saw, it's one for the history books. We're talking about the fastest climb from a near correction to all-time highs since this whole conflict kicked off.
And this is what the bulls are all pointing to. The S&P closing the week at a stunning 7,041.28. That's a massive 11% gain off those March lows. We are officially in what we call blue sky territory, no overhead resistance. And we're holding strong above that key 50-day exponential moving average. So if you're just looking at this chart from a purely technical view, it's a textbook picture of health.
But, and this is a huge but, the energy pits are telling a completely different story. And trust me on this, if you're ignoring what's happening there, you're basically trading with one eye closed.
Just look at this chart. Brent crude has absolutely ripped back towards $98 a barrel. Now, this isn't just some random market noise. No, this is what we traders call the Hormuz premium, and it is back with a vengeance. That spike you're seeing right there, that is pure, unadulterated geopolitical risk getting priced into the market, literally minute by minute.
So what exactly is this premium? Think of it like this. It's an insurance policy. It's the extra cost traders are willing to pay because they're afraid of a catastrophic supply shutdown in the single most important oil choke point on the entire planet. So when you see this premium shooting up, that's your signal. It's the smart money telling you they see a real, immediate danger to the world's energy supply. And look, this danger isn't some far-off possibility. It's happening right now. The main reason oil is surging is because of what's actually happening on the water. Talks broke down, and now the Iranian Revolutionary Guard Navy says the Strait of Hormuz is officially closed. Period. Closed until the U.S. lifts its port blockades. And we can see it in the data. Vessel tracking confirms that ship movement has basically ground to a halt. On top of all that, we're now getting reports of attacks on ships in the area.
And as if that wasn't enough just to throw gasoline on this raging fire, President Trump drops this on Sunday morning. A direct warning that if there's no deal, Washington will, and I'm quoting here, knock out every single power plant and bridge in Iran. Now, remember, the ceasefire expires in just 3 days. The stakes couldn't possibly be higher.
So here we are, at a crossroads. The market is now facing a purely binary event. It has to pick a side, and these next few events are what's going to force it to make a choice. So it really boils down to two totally opposite stories. On the bull side, you've got the algos betting big on a peace dividend. They think the blockade is going to force a complete surrender before that ceasefire deadline hits. But the bears, they're calling BS. They say this record high is a classic bull trap, running on nothing but the fumes of a deal that isn't even signed. They're bracing for a massive energy shock that triggers a market-wide liquidation if we get a no-deal scenario.
Okay, so what do you do? What's the plan? It's simple. Right now, capital preservation is the only trade that matters. Let me repeat that. The only trade that matters. With warships on the move and a ceasefire just 72 hours away from expiring, this is not the time to be a hero.
First things first, that 7,000 level on the S&P, you have to respect it. This is the new line in the sand, both psychologically and structurally. If we get a close on Monday below 7,000, you can write off that record high we just saw. It was a blow-off top. End of story.
Number 2, keep your eyes glued to the 50-day EMA. That number, 6,762, is your absolute structural floor.
If a no-deal headline comes across the wire and we lose that level, you don't think, you don't hesitate, you get out of the way. It is a non-negotiable exit sign for any long position you might have.
Third, you gotta watch gold. That $4,800 level, that's your tell. As long as gold holds that floor, it's telling you that the big institutional money is still hedging. They're still buying that hard asset protection. It's your best indicator for where the real fear is in this market.
And finally, let's talk discipline. This is crucial. Trade with small sizes. Keep your stops incredibly tight. And whatever you do, do not trust the Sunday night futures gap. Wait for the New York Open. Wait for the volume to come in and confirm the move. In a market like this, the ledger doesn't wait for anyone who's late to the party.
So that's the setup. It's one or the other, a peace dividend or a wartime shock. The market is right on the edge of a knife. Stay disciplined, watch these key levels, and I'll see you at the open. This is Steve. The ledger's closed.